In today's video, we are going to be talking about a simple pattern that happens again and again in the currency exchange market and how you potentially spot these as well as trade these setups in the market to possibly catch some really nice reversals. Stay tuned. Let's get into it. Hey traders, welcome back to my YouTube channel. If you don't already know me, my name is Nick and I share all sorts of Forex and trading content here on YouTube. So if you're new to my page, please subscribe down below and give that like button a click if you do enjoy my content. So what we're gonna be talking about today is a pattern that you see happen again and again in the currency market. And it's one of the most basic, simplistic things that even a beginner can spot and potentially catch upwards of 50, 100 pips, even in just one day using some of these concepts. So what I'm going to do in this video is I'm going to lay out what the pattern actually is. We're going to talk about ways to trade that pattern and ways to spot that pattern and to perhaps increase our probability of success with the trades that we're taking. So what the pattern is basically, we did a video similar to this recently where we talked about one of the things that I like to do in my own analysis is I like to evaluate the current status of a market, right? I want to see, is this market a range bound market? Is the market trending? What is our current situation? So what I've got here is I've got a chart pulled up on GBP USD. Now, here's the thing. What this pattern is going to be doing is it's basically similar to our last big video that we did about a basic trading pattern. You can find it right here. I'll pop it up on the screen. What we're going to be looking for is a very simple natured kind of trend. This is also a reversal pattern that I personally really like. So what we're going to be doing here, right, is let's say that we see again a very strong market. We have a series of higher lows. We could put HL for each one of these. Essentially, when we have a market that is trending up, we're going to have higher lows being printed on this market. What do I mean by that? Well, notice what we've got here. You can see that each time this market makes a move to the upside, it's actually when it's pulling back, right? Because markets naturally, they move in waves. Each time that it moves up another wave, the pullback is slightly higher than the previous one. What is that showing? That's showing demand. That's showing buyers are ready, more and more willing to step in and basically buy this market as the price is going up because there's so much demand for the underlying currency pair, right? So when we have something like that happening, as you can see, we have on GBP USD, we have a nice little uptrend starting to form, okay? Well, when we start to see that fade, in the last video we talked about, okay, well, when we start to see lower highs, then we've got a potential trend that is starting to fall. Now, here's the thing, okay? This pattern potentially has a way to catch that reversal a little bit sooner. So in the previous video, we talked about similar to how a head and shoulders pattern may do something like this, and you could potentially catch the rebound looking for the breakdown. This is a similar pattern that we're going to be talking about today, but it's not quite the same as this because sometimes it doesn't look like this. Sometimes the reversal at the top of a trend, right, is not so, linear. It's not so clear and concise. Sometimes we get something like this. Essentially, we have that market that is moving in a series of higher lows and higher highs. But instead of basically doing a higher high and then a lower high, we get something like this. And this is actually not the same pattern. And this is the pattern that we're gonna be talking about today. What you'll notice is that you can take a look, you see higher highs and a healthy uptrend, right? You see a higher high here, we see another higher high here. And then what do we have here? We have a higher high, but then what do you notice about the next high? It's about the same. I guess you could put SH for same high. This is what we call a double top pattern. And today what I'm going to talk about is not only how to spot these, it's relatively easy even for a beginner to spot this sort of pattern, but also how I like to trade this concept and how you can really catch some beautiful reversals off of this concept alone. This is a very clear sign to traders and investors that the market here has basically halted. We've paused and we are starting to consolidate. Now, this is not a guarantee that the market goes shooting to the downside from here, but it is a potential early warning sign sign that the trend may be getting ready. At the very least, it's slowing down and may be ready for some reversal aspect to the potential end of this trend and start to a new trend, okay? So when we have something like a double top, again, it's gonna look like something like this. We have a market moving up, and then all of a sudden we put a high in, things are normal, we pull back, and what happens? We actually see the same high get put in. And the concept here is this is potentially a bearish indication because you essentially have a lack of demand to push the price to new highs. That's not what we saw. And so that basic understanding of how price action works, buyers and sellers pushing price around, sellers were able to hold this area and buyers were unable to, they failed to break this price higher, driving it to new highs. That would be considered a potential rejection. And that's what we've got here on this chart here. Take a look at our example that we've got pulled up on the screen. So we've got this uptrend happening on GBP USD. We can actually look at a live example. Here we go. We've got higher lows, as we mentioned, and we've also got higher highs coming into this market along the way, right? And so what you notice here towards the top is that a double top is not always going to be perfect. People, a lot of times, they're looking for that perfect example for every single trade. And I actually chose this example because this looks like a realistic aspect or a realistic example in the markets that we see, okay? Because it's not going to be a perfect touch of the same point every single time, in my opinion. Double tops and the way the market works doesn't always have to be like that. There's so much market movement and actually some noise just happening in the currency exchange market as well. So we're not going to get that perfect double top every time. And so I wanted to show an example that didn't look exactly perfect. You can see that we get the same picture though. What you notice is that price does drive higher. Again, things are normal, but what do we notice? Well, we got rejection here. Everything is normal. We're starting to see a pullback. We do get that higher high and higher low, right? Everything is normal, but then bam, what you notice is that price barely gets above that previous high, right? It just barely got above it before starting to drop. Okay, what this tells us as traders is it's potentially a sign that, okay, buyers are not really strong enough to really drive the price higher. The next sign is, take a look here. We've actually got the market forming about a same low, right? We're not making a higher low. Remember, we were talking about how basically along this way, we've got higher lows and higher highs, right? But then what do we have here? We start to see markets trading sideways. So we had an uptrending market turned into a sideways market where we basically had our double top. We'll put DT for double top, right? And then price starts to fall. So how could we be trading this? Well, I'll tell you one example of a way that I love to sort of trade these sorts of concepts. When I see a double top print in the market, what I'm gonna go ahead and do is I'm gonna highlight, okay, there's our previous top. If price decides to break through that, again, if this is just a short-term consolidation, then no big deal. I was wrong about my analysis and I'm just gonna, probably stop out of this trade. But what I will usually do in a case that I see something like a double top potentially forming, I will start to look for resistance points where I could basically get short in favor of a potential reversal, especially if I get confirmation from the higher time frames, right? I'm looking at the daily chart. What if I look on the weekly chart and in the weekly we're on a downtrend, right, at some sort of significant resistance? Then that would give me another level of confirmation that this could be a good reversal point. Again, that's another level of kind of advanced technicals, but keeping it simple here, right? Once we see that potential double top be printed in the market, now what I'm looking for is I'm looking for resistance points where I could potentially ride some of the downtrend side of it. So what you'll notice is that we put in some levels of resistance here. Take a look here. We've got this chart area here where we previously had a high. We could go ahead and tag that as a level of resistance, right? We could start looking through what the chart has already showed us as potential areas, right, to form pullback setups, okay? So now we've got the market here. We see the market dropping from our double top. So as price starts to drop, if we start to see a pullback as we see right here, this area could actually be a decent place to look to get short, okay? Anticipating that higher low rather than waiting for it to happen. So remember on the previous example, I talked about head and shoulders patterns where you have something like this, right? You wait for the lower high to form before looking to get short, maybe on a breakout or some sort of pullback, right? This puts you potentially one step ahead of time. Now, it does put you earlier on in the counter trend category, right? We're not waiting for as much confirmation, but it could get you into the trade a little bit earlier. So what I mean by that is we have something like a double top form, and then on a pullback, right, you anticipate that, okay, I think this market has double topped and I think it's possible that we see a downtrend from here. So you go ahead and you potentially would sell this market a little bit earlier than you might have if you were just trading the head and shoulders. So there is a pro to that. You could get into these situations a little bit earlier with this entry style, okay? So that is just an example. So let's say that, you know, this is not a perfect example, but let's just say that you did end up getting short right around here, right? And I know I'm cherry picking because that's not a perfect example. Technically, if we were using this area, I would not have gotten entered into the trade, but for example's sake, let's assume that we did. So let's assume that we took this trade here. Well, now the idea here is that as price comes in or comes for a pullback here, we've already seen a double top here. We've seen some rejection, pretty good chance that we see more rejection, that we start to see some downtrend, right? So as price comes back, what do? Well, this is where I would get my risk to reward going. I would basically look to take my short position here, right? And let's say essentially what I'm going to be doing I'm probably going to be looking for something like a 2 or 3 to 1, depending on what your preference is. So what I would probably do in this case is I would probably want to stop out above the highs, right? As I mentioned, if the price does just consolidate and ultimately trend higher, I don't want to try and fight that. I'll probably just jump out of this position right around a break of the previous high. So this is where I would stop out of the trade. Okay. On the contrary, how do I want to handle my reward system? Well, basically, right, if we got in here, we've got to stop above the previous high. I would look for something like a 2 to 1, or if I'm more patient or I'm more willing to go for a bigger reward to risk, which would essentially be more losses but bigger winners, right? Then I could do something like a 3 to 1 if I wanted to, right? So this 2 to 1 worked out beautifully. You can see we made a nice move back down to this previous low, which ultimately kind of concluded that start to the trend before we ultimately broke a little bit past that previous point. So you could go technically for a 3 to 1, which would have gotten you right back down to the previous low or just very close to it, right? So that is one example of catching some of these big reversals. Now, what I love about this strategy is also what I don't love about this strategy. So what I love about this strategy is that the risk to reward actually can be relatively good. So you can get a lot of risk, something like a 3 to 1 out of these sort of setups, risking 1 to make 3, and that can be great. So if you catch that reversal properly, this can be a beautiful entry style that you might be able to tinker with and ultimately use to your advantage, okay? Now the downside to this is, unlike the head and shoulders pattern, which waits for a little bit more confirmation, this is not gonna always be as accurate. So you're not always gonna get the perfect entry just because you have kind of a double rejection point. So a lot of times what's gonna happen is price is just consolidating and then maybe we shoot to the upside. That's okay. You're not gonna win them all. And the idea here is that essentially you catch some of the winners, right? And you catch the big winners by using a nice reward to risk. And then some of the other ones you just stop out because, you know, that's how trading goes. We're never always 100% correct. But I like this pattern overall. I think that the reward to risk can be really good, especially if you're good at spotting potential setups. And as I mentioned earlier, you can combine other factors using higher time frames, using Fibonacci. You can use other tools to your advantage to basically tack on more probability to your trade and basically find setups that are more effective. Okay, so that is that. I guess we could take a look at one more example that I had here. This is an example of a double bottom. Hopefully by now you can already kind of spot it before I talk about it. As I mentioned again before, I don't believe in being the perfect technical analyst where every price is exactly the right movement. So what I mean by that is this to me would be considered a double bottom, even though technically this wick came down lower. Okay, to me this would still be considered a double bottom. Why? Because we had a rejection point, push to the upside, rejection point, push to the upside. That's really what I'm looking for. It's basically two levels in the same general vicinity where price held bullishly in a downtrend or bearishly in an uptrend. Okay, so now we've seen that. What can we do with it? Well, one way we could do this is, let's say that we highlighted this level as a level. So again, when we see this, let's say that we start to see this right around here. Okay, we've seen one bottom, we've seen two bottoms, and this is where we're at. We see this chart, we say, okay, potential double bottom here. Now, as price pulls back, I'm looking to get long in favor of this uptrend or this bullish trend potential. Is it a guarantee? No, it's not going to work out 100%. So what you can see is that this entry would have been a decent one to get involved, where resistance turned support, and we had that confirmation from the double bottom just below. Okay, so we've got that bullish indication. Prices showing that buyers are pretty strong down in this area. They were holding it twice in the same zone, and now we could get our risk to reward going. So as I mentioned, here's the entry, and what we could do is put a stop just below the lows, and let's say I go for something like a 2-to-1, right? We drag this out until we see 2-to-1 here on our tool and trading view. There it is. Beautiful 2-to-1 trade that worked out beautifully. Now, one more thing I want to add with these risk to rewards is, technically another way you could do this is you could target structures, right? So if you notice that this is a pretty decent resistance, I'll be honest, this would probably be where I'd want to take profits. I probably wouldn't wait for the full 2-to-1 in this case, just because of the technicals here showing, okay, there's a lot of resistance previously here. Now, even though that was not exactly correct, or it could have made more profit, I'm not in the business of trying to pick, the perfect points, but I'm rather just in the business of keeping my risk managed and going for as much as I think is realistically possible, which in this case, right, couple rejection points, that's enough probably for me to say, hey, I'd like to take profit there and close out the trade if we get that. Now, with that, I'd probably still want to maintain something like a reward to risk of 2-to-1. So what that gives me is something that looks a little bit like this. Okay, basically, again, our double bottom being down here, which lines up pretty nicely with the risk to reward. If price breaks back down, we start to see trending to the downside, then no big deal. I stop out of the trade and I move on. There's plenty of opportunities out there, and not every single one is going to be perfect. Guys, if you like this video, please give it a thumbs up down below. Maybe share it with a friend, and we'll see you back next time.